All right. Mic check. 1, 2. Mic check. Let me know if you guys can hear me. Let me know in the chat. Let me see if the chat is alive and well this evening, this Tuesday evening. How we doing? In the chat? All right, let's see. Okay, good. Loud and clear. All right. Good. All right, appreciate that. Well, as people start to make their way into the classroom, into the Zoom room, how about we start off with this? How about you put in the chat? Where are you guys from? Where you guys programming in for? Type your city in the chat. I know we're live on YouTube today. So let me know where you guys are plugging in from. Okay. Let's go. We got PA in the house. Let's go. I love it. Seven Hills, Ohio, right up the street. What's up, Ron? How we doing? Hope you long time no see. Hope you've been well. Good. All right. Well, as people start to make their way in, I'm going to try to keep it to exactly 60 minutes. To like I'm gonna try. I think last time I ran this, I went over like five or so minutes. But want to make sure I'm timely. You guys are getting most value out of here. You're able to uh get some good stuff. Let's see, a couple of those in there. Okay, good. All right, cool. So let's do this. As people make their way in, and I see you there on YouTube. Okay, good. I'm gonna get started, and as people start to trickle in, I just want to make sure this is valuable. I'm not gonna go over my time limit, so let's get into it. All right. So before we get started, if you guys can hear me, my goal of today, I have 6 rules. Okay, 6 rules for you to be able to get the most value out of this class. Okay. Number one, I need you to grab a pen, grab a paper. Maybe it's an iPad. I know I typically do stuff on iPad. I want you to be able to take some notes during this call because I believe you're going to get a lot of value from this. Right. And pause everything. Right. It's gonna be for the next 57 minutes, and I have a lot of content to dive through. But just focus up on this next hour, because some of the information maybe you've heard of before, but I can guarantee there's something that you're not as familiar with, and you're gonna learn something today. I can guarantee that. Put your phone on DND. Just do not disturb for a little second, and just be able to take in what you're going to be able to receive today. Save your questions till the end. There is I believe I enabled the Q&A section. Yeah, so there's a Q&A section. So if you have any questions as we're diving into some, drop it down in the Q&A section. And this could be something that I answer towards the end if we have time. And maybe we'll potentially go over. I do have another call right after this, so we have to be timely. Positive vibes in the chat. Again, I can't see your face. So if I can't see your face, I need some content in the chat, right? I feed off of the chat to see if you guys are keeping up what I'm putting down, right? So positive vibes, and then stay until the end. Stay until the end. I'm gonna be able to make sure I get you some. I have a free gift at the end. So stick around to the end, and let's see what else we got. That's it. Let's go. All right, so tax-free lifestyle. So how to build wealth using tax-saving strategies without worrying about the IRS. I have too many clients who are so worried about the IRS, and my goal for today is to be able to show you how you can live tax-free and not have to worry about the IRS, right? How does that look like? Okay. So first and foremost, my name is Ibrahim Muhammad. I'm the CEO of I Am Accounting LLC. If you don't know who I am, so I think it's important to kind of let you know how I kind of got into this journey that I walked in. I'm gonna go through this really briefly. So how did I get into this? I'm originally from the Chicago, Illinois, born and raised Chicago, Illinois. I have a heritage from Nigeria. My family is all both my parents and my mom and my dad both born in Nigeria. I actually lived in Nigeria for about 4.5 years, so I came back to Chicago And I was fortunate. I ended up going to the University of Akron. Before that, I actually went to Ashland University. I got a scholarship to play at Ashland University. Ended up transferring to the University of Akron, where I studied accounting. Ended up having the opportunity to be able to play football. This is a picture of me and my brother during senior night. A great opportunity while I was there. It was the one time where Akron was actually pretty decent. Where we actually had a winning season and won some games. Ended up getting married straight out of college. Met my wife. This is my beautiful daughter. I have to update this photo because I got another 3-month-old in the house. So as you can imagine, with accounting tax season, it was an exciting tax season to say the least. Um, Straight out of college, started working for some really really big companies. I worked for a company called Nestle here out in Solon, working in supply chain and finance. And at that time, I decided to go back to get my master's. So I ended up getting my master's degree. I wanted to be able to have enough credit so I could go sit for my CPA license. But then started getting a lot of more opportunities. Worked for multiple Fortune 500 companies to where I ended up getting access to work for a company at Rockwell Automation up the street from where I am. And then Moen. Moen was another big corporation that I got to work, right? So that's the faucet company. Then I started to work for another company called Goodyear's. I got some really really good opportunities. So I worked for some major companies, but I didn't really, it was a reason I did this, but in a span of like 6 to 7 years. And I wasn't satisfied. So I wanted to be able to, become an entrepreneur. I'm working with, big corporations. A lot of people, a lot of people thought me I'd go maybe big four, but I wanted to kind of work with a lot of small businesses, and where it was more personal, like, and I could focus on helping them build profit, right? So I wanted to become a profit first professional, which is one of the big things. And one of the if you ever heard of Mike McAllowitz, that's one of the people who focus on helping actual business owners not just focus on revenue, but focus more on the profits and actually helping them build a profit, because that helps you. It assists with being able to actually live tax free, which we're going to talk about. Then I decided to go the path of becoming an enrolled agent, which I'm going to talk about here as well. Got several different licenses, from QuickBooks licenses. Became Ramsey trusted, and if you guys know who Dave Ramsey is, he's very big on living debt free, being able to build wealth for your family. So became very accustomed to him. Became one of the top accountants in Northeast Ohio, and really just excited about where I was going. But at that crossroad when I was working corporate, I wasn't satisfied where I was in life, and I wanted to be able to do a little bit more. So until I read this book, okay. So if you're an entrepreneur, you're a business owner. Most people have heard of this book, or their dads or their dads have heard of this book. But this was the crossroad where I really started to take it from textbooks to actual application on what life looked like after working in corporate for 7 years. And I realized that there was a way on how money was made. And through this cash flow quadrant, it talks about employees, it talks about self-employed business owners, right? That being the active side of income. And then it talked about passive side, or I even like to utilize the word, asset generated income, and it's talking about moving over to the passive side, with business ownership, investors, right? That with business owners, having people work with you, and having investors where you're actually having your money work, for you to make you more money. And I wanted to do more on the right side. I wanted to be able to have more on the right side, but even if you're on the left side, how can you be able to leverage all of the quadrants and make it tax efficient? Right, that was one of the things I would look at. It's like, because there's a way on how you could do all four, because I did all four all at the same time, until I said, okay, now it's time to transition, right? And start to truly build wealth and have my money start to work for me. So what exactly did I do? I took action. I invested my time and my resources. And honestly, I just learned from the best, right? I didn't want to, I heard this one saying and I never forgot it. You don't have to know everything. You just have to, it's okay to be a copycat. You just have to copy the right cat. And I think I copied. I think I copied the right cats. All right, it paid off. And I don't want you to take my word for it. And so let me show you some of my mentors that I've been able to work with. Number one, Michelle Valbrin, CPA, award-winning author, tax strategist, taught me everything I know about tax planning and being able to actually help my clients be able to save $10,000, $20,000, $30,000, $50,000 in taxes. Bill Fonfametti, another CPA, taught me everything I know about actually, the bookkeeping side of it, and the managerial side of it, understanding the difference between accruals and cash, right? And being able to manage your finances to help you build more profit. Weston Hill, kind of, got me into the game of understanding the tax game. And then Carter Cofield, right? Number one accountant for entrepreneurs, right? Taught me all I know about business ownership and being able to, become one of those accountants that's, that builds a virtual presence, right? And then the entire Dennis family, which there's all of the above, right? It kind of complemented everything I was working on, from tax planning to tax preparation. But I wanted to get access to the best in the industry, right? Because I knew if I got access to the best people in the industry, it would only duplicate me. It would only duplicate my business, but I wanted to do it to where it made an even bigger impact, not just socially, but actually in my clients' businesses. Okay. So I got access. And can I be transparent? Let me know in the chat. Can I be transparent today? Because I'm going to be 100% transparent. I got to get feedback. Come on. Absolutely. Okay. So, um, this is my tax return back in 2022 when I decided, all right, I'm gonna go in the route of entrepreneurship. Okay, so that year I filed for about 172,000, and the number that I want you guys to look at here is this number right here on line 8. It's $43,449. Okay, when I saw this number right here, it adds up to the amount of deductions and expenses that I was able to find in my first year of entrepreneurship. Okay, to where I was like, oh, I could actually write off things, and I'm gonna talk all about all the things you can write off. But this opened up my eyes to where I had $43,000 in deductions. It led to $102,000 in taxable income instead of 172, which got me back $11,382 in a refund. When this happened, this is when I realized that the tax code was meant to. It's really built for investors and business owners, right? Because as soon as I went from just a basic W-2 employee to starting a business and being an entrepreneur, I immediately started to take advantage of the tax code and a lot of things that I'm going to talk about today. So this opened up my eyes to where I was like, okay, there's a lot more out there and people don't even know this stuff. How can I be able to educate them and teach them how to be able to leverage the tax code for their own good? Okay, so it started like that. Now, these tax secrets, they've helped my clients save thousands of dollars, and it's legit. I'm telling you, I believe taxes. There's two things that are inevitable: taxes and death. Okay, I don't want to be morbid, but those are the two things that are inevitable. So, if those are inevitable, what do we do to prevent them? Right? What are we gonna do to actually do that? To like, what are you doing to prevent, a sudden cause of death? You're probably trying to eat well. You're probably trying to do things to better yourself, right? So what are we doing to actually limit the amount of taxes that you're paying? Because most people spend over half of their life paying taxes. When if you just recover an additional, if I can show you how to recover an additional $50,000, what would that do? Okay, so here are a couple examples of some tax returns where I've learned out some things where I've helped several clients cut $5,700 in taxes, $7,000 in taxes, $0 in taxes, $35,000 in taxes. Now, Patricia here, this is CEO and owner of Nick Life Accounting. Couple reviews here to where was able to help her save $17,000 in taxes. Kelly J, founder of Dren Cycle Studio, out in Georgia, recommended us best tax services I've ever had. She wasn't even expecting a refund all year. And wasn't shocked of the amount that I was able to bring out for her. All right, she almost fell out of her chair. Is what she said. And then Iffy, a physician and real estate investor, to where we were able to help him get a $53,000 refund by simply applying some real estate strategies like a cost segregation, which we'll talk about. These are some simple things that we were able to apply, and immediately we're able to recover tons of the taxes that he's been paying, year after year. Okay, now a disclaimer here: this training is for information purposes only. Okay, everybody's tax situation is different. So if you get information off of social media, if you get all these things, it sounds good, doesn't necessarily mean it applies to you. Okay, your situation is different. Your filing status is different. Your tax bracket is different. So I don't just take information and just run with it as like immediate advice. This is gonna be some surface level stuff, and I'm gonna dive into it a little bit. It is a little, I would say, dense, but I'm gonna run through a lot of information, but don't just take it and run. I say consult with an enrolled agent, consult with a tax professional, consult with a CPA to answer your specific questions to your situation. Okay, you heard it here. All right. So the good news about taxes is that the tax code is actually not created to make you, pay a lot of money in taxes. Like, contrary to what people say, the tax code is actually a rule book that's teaching you how to legally avoid paying taxes if you understand it. So what type of businesses or these strategies actually work for? They work for small business owners. And excuse me, I could tell I'm overcoming right now. So if you hear me coughing, just bear with me, okay? But they work for small business owners, they work for skilled professionals, and then they work for solopreneurs, right? So if you're a small business owner, you start up a business, or you're a skilled professional, you're a physician, you're a lawyer, you're a doctor, right? Or you have some sort of skill set, you're a solopreneur, where you started a business, you're getting 1099, you're a contractor. These are some things that you could benefit from. Now, by the end of this masterclass, my goal is I want to help you build wealth for yourself by utilizing some tax saving strategies without worrying about the IRS. That's the goal. So, what are the things that we're going to cover today? Secret number one: why understanding taxes is your biggest return on your investment to actually increasing wealth. Secret number two is how successful entrepreneurs and investors save $10,000 to $100,000 of taxes every single year, but they do it legally and ethically. And then secret number three is how to find and hire the right tax professional that's going to actually save you thousands, right? Not your CPA that's not going to give you any sort of advice that you're going to one time a year. An actual tax professional is going to help you save because they truly care about your future. So put in the chat, which secret do you feel like you need the most? Let me know in the chat. Let me know. Let me know. We'll put a one in the chat if it's one. Put a two in the chat if it's two. Put a three in the chat if it's three. All right, I gotta make sure I put the chat because I can't even see it. All right, okay. We got a two. I see on YouTube. Okay, we got a one. Okay, awesome. Awesome, awesome. Okay, okay. Two, two. I love it. Love it. Okay. So let's dive into it. Let's see. So first, before we even get into, I just want you guys to just visually just imagine this for a second. What would it be like to have an additional $10,000 to $50,000 per year just from saving on your taxes? Okay. Like, put a yes in the chat, or like just think about this for a second. What would you do? Like, would you start a business? Would you go on a family trip? Like, imagine, like, put yourself there first and imagine what you would do. What that trip would look like. Who's that person that you want to give back to? What would that do for you? Okay. In this next, I don't even know how much time I got. So, like, okay, I got 40 minutes. This next 40 minutes, I'm gonna show you how you, as a business owner or a skilled professional, can actually maximize your earnings with proven tax saving strategies. Okay, so let's dive into it. Number one is why understanding taxes is your biggest return on investment into actually building wealth. Okay. So step one, first and foremost, I almost consider myself almost like a tax doctor, to where it's hard for me to be able to actually help you unless I've seen your history, right? You're not going to go to a doctor and they're just going to say, all right, here, take ibuprofen, take this, da 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 da, without knowing like the history. Like, they're going to pull up your chart. It's the same thing with taxes. If your tax professional doesn't ask you for your history, you need to find a new tax professional, right? Because they're just inputting information. So I believe taxes are your single largest expense. Let me show you why. When you make money, and I need some input on this one, okay? When you make money, what do you got to pay? You got to pay income tax. I'll give you the first one. I got a couple more. When you make money, you got to pay income tax. Then what happens when you buy something? What happens when you buy something? Pay sales tax, right? What happens when you purchase property? What do you pay? It's a good one right here. Yep, property tax. Yep. The sin tax. I love it. And when you profit from real estate, what do you have to pay? They're coming at you again. I know we know what this is. Capital gains, right? And then when you die, right? Now what do you have to pay? Got to pay the death tax. Like, come on, man. Estate tax, right? You got to pay the death tax. But do you know what the biggest tax of them all is? Type the answer in the chat. What do you think? What do you think is the biggest tax of them all? Okay, this is a hard one. I'll tell you. I'll tell you what it is. It's the ignorance tax. Okay. And ignorance sounds like a bad word. Really, like ignorance just is just a lack of knowledge or information. You just don't know what you don't know, right? But I'm gonna give you. I believe you're gonna learn some information today to where you have no excuse, right? You're gonna have some information that you can begin to go do some more research on. Okay, so what are the consequences of ignorance tax? Number one is you're failing to abide by the IRS rules, which can result in different fines and penalties. You can start overpaying due to the lack of understanding of the tax rules, right? Or you just have a negligent, tax professional, right? Or undereducated, I would say. Um, and you may, God forbid, lose a chance, potentially lose your business. Okay, but I believe ignorance tax equals overpayment, right? So if you're overpaying right now, it's just you're paying the ignorance tax. Right. So let me know. Have you ever felt like you've overpaid? Let me know. I just want to get a vibe because maybe you guys are in the right room. Maybe you're not. I have to understand if you're in the right room or not. You feel like you've overpaid in taxes? And let me get my chat over here. Okay, that's what I want right here. Good. Okay. What's up, Lashar? Plugging in on YouTube. I see you. Okay. Yes. Okay, good. So this number right here, some years, okay. Um, this number right here, this is the amount of taxes, the amount of pages that are in the Internal Revenue Code, in the tax code. Okay, there's a lot of pages in there. It's very complex, right? And maybe you've heard people dive into a lot of different codes, a lot of different court cases that are out there. A lot of different. It's a lot of information, right? Um, Even Albert Einstein said that the hardest thing in the world to understand is income tax. Okay, one of the smartest men. Now, because it's a hot topic, I threw this in here, and I just think it's important for you to understand and know, right? What this isn't a political thing. Like I'm not trying to get political on you guys. But if you haven't heard, if you're living under a rock and you haven't heard about the big beautiful bill that passed the House that's currently at the Senate, this is important, right? If this bill passes, it's going to make a significant amount of changes. But I want to talk about what happens if the bill does pass and what happens if the bill doesn't pass. And feel free to take a screenshot of this. I'm gonna fly through this because it's there's a lot. There's a significant amount of pages and stuff that go through this. I just wanted to find a little bit of the highlights on what happens. Okay. So if this bill passes, the child tax credit increases to $2,500 per child. The standard deduction will stay doubled and it's going to increase by an additional $2,000 per family. Estate tax exemption stays at 13 million instead of dropping down to 6 million. 100% depreciation. And we're gonna dive into a couple of these in detail, like individually outside of the bill. But just take a picture of this. It could be a conversation we have. 100% bonus depreciation is renewed from 2025 to 2030. Section 179 of the expensing limit gets doubled to 2.5 million. The small business income deduction is going to be permanent at 23%. Trump has a newborn savings account for kids that's going to go from 25 to 2028. No tax on tips, which is probably the hot thing that you guys are hearing about. No tax on overtime for workers. Auto loan interest on U.S. Made cars that become deductible. R&D expenses can be immediately written off. That 1099K rule is that was at $600 where you have to start to report, your Venmo, Cash App, Zelle, all these different things that you're getting paid. The threshold actually raises to 2,000 instead of 600. And then it ends the green energy tax credits and foreign subsidies, right? Trump just doesn't like, he's not a big fan of green energy. Now, what happens if this bill doesn't pass? Okay, that's what I look at. Okay, again, there could be a lot of big promises, right? But I look at what happens if it doesn't. Okay, so if this doesn't pass, the standard deduction is going to drop by $15,000 for married couples. Estate tax exemption falls to $6 million. Bonus depreciation drops to 40%. It's not going to go back to 100%. So it drops to 40% this year, then 20% in 2026, and then it's over. Right? Then we're going to talk about the different write-offs. Then R&D now has to be amortized over 5 years. Right? Research and development. The SALT, which is a state and local tax deduction, remains capped at 10K instead of up to 40K. There's no there's gonna be no savings account, no tax, no tax on tips. Tax relief is not a thing, and the $600 1099K rule remains in effect. Okay, so I hope you took some screenshots of this, and I'll probably release a YouTube video here, kind of diving into more details and give you guys updated, on where this bill is at. So What society tells us though is that they utilize poor and rich, okay, in which they say poor makes money that and I don't even like you. Scratch these words. I like to utilize the words ignorant and enlightened, okay, and I don't put a negative connotation. I just say the ignorant. What they do is they make money. They think they just need to make money, and then they pay taxes, and then whatever's left is what they utilize to spend. But what the enlightened people do, right? They make money, they spend money, and then they pay taxes. Or Uncle Sam gets what's left, right? And their goal is, how can I get it to where it's as low as possible, to where there ain't nothing left, right? So it's not the CPA with the most experience; it's the one who knows the tax system, right? There's several CPAs I know and colleagues who they're in their 50s, 60s, 70s, and they've been doing it for 30 years, but they're not doing tax strategy. They're filing taxes. They're filing tax returns. That's their bread and butter, and they don't want to teach you a tax strategy, right? Because it's gonna be too much. Because at my personal opinion, they probably, not all of them, but a lot of them really don't really care about. They just it's just another thing during tax season. It's why you don't hear from them after that, right? And that's a big secret. So does this make sense? You guys keeping what I'm putting down? Put a yes in the chat if you're following. I know I'm flying through. I got 30 minutes to dive into some really good stuff. I just noticed that this is a green screen. All right, you're picking up. All right, good. Okay, yeah, I got a yes on the. Okay, good. All right, so let's dive into secret number 2. Okay, secret number 2 is how successful entrepreneurs and investors save 10,000 to 100K in taxes legally and ethically. Excuse me. This is my favorite. So let me show you how you can be able to save anywhere from 10K to 100K for how I do it for my clients. So first and foremost, I think it's important to understand what are tax deductions and what are tax credits. So tax deductions, this reduces your taxable income, and they lower the amount of money or income that is subject to taxation. Okay. Whereas tax credits, and I'm going to explain this in a second. Whereas tax credits, they directly reduce the amount of money that of tax that is owed. Right. So it's like a dollar for dollar discount to your tax liability. So for example, you in your business, you generate $100,000, right? You get $100, whether it's commissions, whether it's sales, however you get the money, right? You have $100,000, but you have, expenses, right? You have a lot of different expenses. You have, a lot of tax deductions, like from, your marketing, your advertising, your contract labor, your mileage, your vehicle expenses, things like that. And let's just say that totals to the amount of, let's say, $20,000, right? You have $20,000 in total deductions. Now you go from $100,000 to $80,000, and you take that $80,000, and obviously there's going to be the standard deduction, right? There's going to be some additional deduction, but for example's sakes, you take that $80,000 and you put it on the tax bracket, and you pay based on where you fall on that tax bracket, and then based on your filing status, right? Whether you're single, you're head of household, you're married filing jointly, it depends, but it just lowers the amount that you're going to be taxed on the tax bracket. Whereas tax credits, let's say it is 80,000. And let's just say, for example, from that, you end up owing $10,000, right? From that. So you're in the higher bracket, you're going to end up owing $10,000, but you get qualified for, $2,000 in the child tax credit, or potentially $2,500 if the bill passes, right? $2,000, that $10,000 goes from, now you only owe $8,000. It immediately reduces your taxable, that tax liability that you were required to pay to the IRS. Right. So that's why credits, are like are important for you to understand which credits you qualify for. Do you qualify for the research and development credit? Do you qualify for premium credit? Do you qualify for the child tax credit, earned income credit, whatever the case, whatever the credit may be, American Opportunity Credit, where maybe your children are going to school for within 4 years, right? Do you qualify for these credits, and are you actually implementing them on your tax return? Okay. I'm only going to talk to you about one code today, and you probably hear about it all the time, right? But I think it's important to understand and actually just read the definition, right? So Section 162A. Section 162A, it just says it allows a deduction for all of the ordinary and necessary expenses paid or incurred during the taxable year and carrying on any trade or business. Okay? So what does that mean? And it's also important because we missed this out, right? Section 262, however, provides that no deduction is allowed for personal, living, or family expenses. Okay, so you have to, again, it says right there, in carrying any trade or business, right? So in order to be able to start to take deductions, it's not like how it was before, right? Being a W-2 employee, you have to have a trade or a business. You have to be an investor, right? You have to be able to actually be, to be able to take advantage of this to where ordinary and necessary expenses, things that you need to actually grow your business. This is the most and one of the most important codes out there, right? So you have to understand, okay, what are some things out there that I need in order for me to make money? If I need this in order to make money. Not necessarily one. Like I'm not talking about you. You don't necessarily. Like I see it all the time. Hey, yeah, I need this haircut to look professional in order for me to be able to actually sell my product. Okay, it's not necessarily true. Okay, but what are some things that you need in your field, in your line of work, to hack that you need to do in order to be able to make money, right? And we could talk about that. This is conversation you should ask your accountant. Okay, so let's dive into some good stuff. So, what are 6 ways you can do to live tax free forever? Okay, first thing first is deductions, right? Deductions are going to help you, they're going to help you utilize your allowable expenses to reduce your taxable income, and it's going to help you optimize your tax liabilities. Okay, that's the first one. Legal entity structure, right? This is one, it's very crucial. Selecting an appropriate business structure can help you minimize your tax obligations and help you protect more of your assets. I see too many people just get too excited and they get started. They just open up something and they start making money, but they never actually see, okay, well, how am I structured? I'm gonna dive into the differences of how you're structured in tax here in a second. Um, Retirement, right? Retirement helps you save money for for the future, right? And pay less taxes today, right? And now you have money for when you get whatever age you want to retire, right? There's some tax benefits there. Insurance, right? You can get insurance for your business or for yourself, right? And you can be able to utilize that to be able to pay less in taxes. Okay. And there's a lot of loopholes. There's a lot of loopholes, and loophole sounds like a bad word. I don't know. I don't know something about loophole. Like these are legal loopholes, right? That's gonna actually help you pay less in taxes, and some people just don't know about them, right? Like there's a few that I'll talk about today. And then advanced planning strategies, right? Advanced planning strategies are going to help you utilize different tricks to help you, shift, right? So maybe some income shifting strategies, some tax harvesting strategies. It's going to actually help you, set up some different special accounts to help you pay less and reach some of your goals faster. So some of the top deductions for business owners is, number one is vehicle expenses. Vehicle expenses, allows you to deduct the costs that related to your vehicle for business purposes, right? Like gas, maintenance, and depreciation. Then we have advertising. You can write off your expenses for promoting your business, and this can include, Facebook ads, right? This could, Google ads. Right? That's a big thing right now for marketing. It's a lot of ads, right? Marketing materials from flyers to billboards to, yard signs, whatever the case may be, and even the cost of your website, right, or your landing page, things that you need to be able to actually market your business to gain clients. Supplies and equipment. You can deduct the cost of items that you need to actually run your business. So office supplies, tools, machinery, and then on top of that, these are some things that can actually be, depreciated, right, or or amortized. It just depends. And then professional services, right? If you hire my team or you hire any accountant, guess what? We're a write off, right? Your consultants can be a write off. Your lawyer can be a write off. Your tax professional, your accountant can be a write off, right? And then again, as well as all the different equipment purchases and different things that you utilize for business operations, but or and some education to actually further your education in your line of work that you may need in order to be able to service your clients even more, right? So certain education, which is kind of backwards. It's crazy because like, how come I couldn't write off my degree or degrees, right? How can I couldn't write any of that off? But as soon as I become an entrepreneur, I can write off education, right? It has to pertain, right? It has to be in your line, right? But I was just that's so contrary to what I was taught. And then travel, of course, right? You can deduct expenses that are incurred while traveling for business, right? Such as your airfare, your lodging, rental cars and meals, things like. We're going to talk about meals. You can write off 50%. You typically 50% of your meals, right? And what I've done is, I advise my clients is like, hey, how like I'm going to Chicago here in a second. And I plan every trip I take. Right, my family's coming to my. We're going on a trip to Chicago. I'm originally from Chicago, but like I plan my trips around business activity. right? I'm going to an IRS conference, in July, right? It's right around the 4th of July timeframe, but I planned it out to where, I could leave on a Friday to where, my flights, my travel, right? I'm going for a conference and I'm spending at least 4 hours, a day within, those business activities to where I can literally write off different meals. I can write off the travel there. And in between, hey, I'm gonna go to the conference, but now I get to spend time with my family. I can go do things with my family in the area. Summertime shy. I love Chicago during the summertime. We could go to the restaurant. We could go to all these different places. But that travel there, some of my meals are now tax deductible. My travel back can be tax deductible because I did go there for business. But I found ways to be able to leverage both. Right. This is ways that you could just learn how to be able to live tax free by balancing some things. Right now, again, it's all about documentation. It's all about doing this the right way, but there's ways on how you can plan things around this. Okay. Um, so are you guys currently utilizing any of these strategies? Let me know. Let me know in the chat, right? Because we're gonna dive into some deeper stuff. Because this is still surface level, but again, I know this could be some things that maybe you haven't heard of. Let me know in the chat. Give me some feedback. Put a yes in the chat if this is something that you've heard of. Okay. Okay. Awesome. All right, good. Yes. All right, so here are 5 different investments that can immediately help you reduce your tax bill. Okay, so if you had a tax bill and you were thinking you had a tax bill this past season, like, "Dang, what could I have done?" Okay, I'm gonna talk about just some legit things that you can potentially look to utilize and depending on your situation this year. First things first is real estate, which I believe is the number one way and it's a number one way to actually reduce your tax liability, especially for real estate investors. Um, but this is what it creates a paper loss. Okay, you could take depreciation deduction that's going to be able to offset, your rental income. It's going to be able to offset your taxable income, your W-2 income. This is why, one of my clients who's a physician, like I talked about, this is one of the main things he utilizes and you can qualify, for a couple of different statuses that I'm gonna talk about. Okay. Now the depreciation. So I talked about it. So the depreciation deduction can offset your entire income. There's 2 main qualifications, right? There's real estate professional status and the short term rental status, short term rentals, right? So when we talk about real estate professional status, that this is there's a lot of rules that come with this. I think I'm gonna dive into a little bit. Yeah. So there's over 50%. You have to spend over 50% of your professional service have to be involved in real estate. And then 750 hours have to be involved throughout the entire year on your properties. Okay. And you have to material participate. And there's a lot of rules that you can qualify as far as material participation. But I'm gonna list a couple of them off, okay? And just take notes and maybe the most common one I'm gonna talk about here in a second. But there's a 500-hour rule, right? There's a 500-hour rule where you working in the business, you're putting 500 hours in a year, okay? There's number 2 is the do it all rule, right? So you can you're doing all of it yourself. You're doing all the work yourself. You have no help. That's your involvement. So your material part says you don't have anybody that's assisting you with that property. There's the 100-hour rule, right? Which is one of the most ones that you could actually qualify for, right? Where you work at least 100 hours in a year, and no one else works more than you, right? That's the key. No one else works more than you, but you work putting 100 hours. Then there's a combined activities rule, right? Where you work on several different businesses or rentals, and together you work more than 500 hours. Okay, and there's more. I could keep going, but I'll just give you the 5th one. But there's also a past participation rule, right? So you worked on that business or that rental for any of those last 10 years, right? So there's past participation rules. Okay, and there's a lot more rules that you could qualify for. But with the real estate professional status, this is a really, really good one because it helps you offset your taxable income, your W-2 income, your real estate income. It allows you to actually have some diversification with substantial time commitment. But then short-term rentals is more flexible. Okay, it's more flexible. This is your Airbnbs of the world. This is your Verbals of the world. And this is a strategy that's really there's some high income potential, right? Because they're staying in there for 7 days or less, right? They're in there and they're in and out, right? But sometimes there could be some costs that come with that, some tax deductions, right? From cleaning fees, right? Maintenance fees that may come through that. But you could qualify for that, and there could be a lot of flexibility if you're working a W-2, if you have another side gig. Okay, so that's your opportunity to be able to qualify, and it's easier for a lot of my clients to be able to qualify for this than it is for real estate professional status, unless you have a spouse, right? If you have a spouse, you can be able to utilize your spouse to qualify for the real estate professional status, or if you have access, and that's really the go-to is your spouse. Other than that, is really, really hard, right? And there's some different documentation that you have to be able to make sure you qualify for this. And you're putting it right on your tax return. Okay, so I can take a deep dive on this real estate part, but it's a lot we're gonna cover here. Okay, the next one is oil and gas. Oil and gas is government tax deductions for different intangible and tangible drilling costs, right? That can help cover the majority of that. That can help you cover the majority of that investment, and 100% of it is actually tax deductible immediately. Okay, all right. So I getting ahead of myself here, but it's 100% deductible immediately. And now these expenses, and this is more so again. I know this is gonna get complex, but this is like wealth building stuff. Okay. So if you know you're gonna make a lot of money, you're gonna start to generate income, right? And I'm gonna talk about some simple stuff, but this is some things on how the wealthy build wealth. But there's some different things to where the labors, the supplies that you need for the actual drilling costs, you can deduct all of these costs right away in the same year. And then the tangible drilling costs, these are things like equipment that's actually used for the drilling. You can be able to deduct those costs like a lot. You could deduct a decent amount of this as well. But you could also deduct a lot of it over a larger time, right? So you can be able to take a decent amount of it along the way. Okay, so there's oil and gas. And then simple things that I guarantee maybe you've heard of, and maybe you're utilizing, maybe you know the contribution limits, but traditional 401k, right? These are the contributions that are tax deductible to help you reduce your taxable income, right? They're going to help you, have more, now you're investing into your future, but you're also taking, a tax deduction. And there's higher contribution limits, depending on even if your employer matches, right? You have a percentage match for your employer, right? Traditional IRAs, right? This also offers tax deductible contributions to help you reduce your taxable income. And it's very straightforward. It's straightforward setup if you find the right professional. And you can get it through different financial institutions, and it's gonna help you lower your contribution limits that compared to like a 401k, right? So this is another avenue that can be broken down into you within something that we're gonna discuss here in a second. Okay. And then finally, I think it is finally, I have another one, but also health savings accounts, right? I love HSAs, right? Your contributions to an HSA, if you qualify for an HSA, your withdrawals, right, are tax deductible. Your withdrawals can that are qualified for medical expenses can be tax deductible, can be tax free. I mean, right? They can be tax free. So now I remember this is back when I was working at Nestle. They were contributing $500 to my contribution, right? And then you can match and put a certain amount in there, right? And there's certain limits, but once it gets past a certain level, like $2,000, you can start to actually you know invest, right? It's not just a savings account. You can start to invest and grow it. And now for your medical expenses, you can have tax, your medical expenses can be a can be tax free with the health savings account, right? So if you have a high deductible plan, with your employer, or if you have an employer, this is something that you could leverage from all my W-2s out there. So think about that. I always recommend, hey, if you have a traditional 401k, hey, match that thing, right? If you have an HSA, hey, get all the free money you can, right? Get it to a level to where you can start to invest some of that money and be able to take some of that money for your medical expenses as you grow. That can be tax free. Um, so let me get a pulse. I know I'm rolling, and I got some more stuff I'm doing on time. Okay, 16 minutes. Are you guys getting value so far? Is this making sense? Put a yes in the chat if this makes sense, or someone if you're getting value. Okay, good. All right, let's see chat. Okay, good. Good. Okay. All right. So, what most professionals don't understand, especially tax professionals, okay, is there's a difference between how you're structured and how you're taxed, like I talked about earlier. There's sole proprietorships, right? Sole proprietorships, this is when you're the only owner and you're responsible for all the aspects of the business. Okay. It's pretty much the simplest way to get in there. You can file a tax return under your social security number. Okay. You don't necessarily have to get an EIN number. Sorry, you're just getting started. And then there's partnerships where you co-own a business with another partner, right? And now you're sharing profits, you're sharing the losses, and you're sharing the responsibilities. And then there's LLCs. Okay, with the LLCs, this offers liability protection. Okay, limited liability corporation. Okay. So this provides, it's a mix of both. I think it's the most flexible entity that's out there, right? Because you get a little mix of combining of the partnerships and corporations, right? So you could upgrade, right, to where you've heard people talk about upgrading to an S corp, right? And one of the most flexibles out there. And then there's corporations, right? So corporation is a separate legal entity that now, that has shareholders, right? Like an S corporation or C corporation. They have shareholders, and now it's offering liability protection, but you also have the potential to start selling stock, right? You're going to have shareholders. Okay. But how you're taxed for these is a little different. Okay. Sole proprietors, your tax on it's pretty much this all gets reported on your personal tax return, your form 1040. So you can start a business, you can start a lemonade stand today, start making money, and this is going to go on a Schedule C, right? It'll be reported on your individual tax return. Okay. When you have a partnership and now you have a business partner, right? You guys have a lemonade stand and made, $1,000 in profit. Okay, that profit in $1,000, if you guys are 50% partners, okay, now you have to file a 1065 tax return, and he gets to report 500 on his tax return, and you get to report $500 on your tax return as income, right? As a net income, as a net gain, right? Net profit. And that's going to get distributed on a Schedule K1. Okay. And then there's S corps, which operates it's filed pretty similar to a partnership. But there's some differences. Okay, so with the S corporation, right? There's some different requirements. It's not as easy as people make it seem. I think it's told, hey, just switch to an S corporation. Okay, it could potentially provide some tax benefits, but then it also might not make sense for you. It might end up costing you more, right? Because the filing of this S corp is more complex, so your tax professionals probably going to charge you more. You have to now have board meetings. You're required to run payroll, right? Pay yourself a reasonable salary. And it's going to get filed on 1120S tax return. And a lot of times, as you start to grow, you need proper bookkeeping. You need really, really good bookkeeping, because you're going to need copies of your balance sheet. You're going to need copies, of your income, your profit and loss statement, right? Your cash flow statement. So things to be properly reported on the tax return and then distributed to each shareholder based on their percentage. Okay, so that's another very important thing. And then for C corporations pay us completely. It's filed separately, and they actually have to pay at the corporate tax rate. Right now it's at 21%. And then there's different shareholders. They get taxed again based on the dividends that they receive, which is where you probably hear a lot about double taxation. Right, so now they're paying on the taxes. They're paying on they pay the 21% tax rate. Right, potentially going to go up if the bill doesn't pass. Right. And now you have to pay that, and then again you receive dividends. The shareholders are receiving dividends, right? Whether you're doing it quarterly, whether you're doing it, however however it's set up in your operating agreement. And now you also have to pay taxes on that on your individual tax return based on the dividends you see from that corporation that again gets distributed to each shareholder on the K1. Okay, so I just believe that again, in order to change your tax, you just need to change the facts, right? That's really the big thing. You have to change the facts. So does that make sense? I know I ran through that, but does that make sense between the structure and how you're taxed? Because we're about to roll through step number 3. Okay. Okay, confusing, but yes. Again, I believe it's definitely confusing, which is why it's important. Hey, start the business. If you're a W-2 employee watching this, watching this recording, you're watching on YouTube, you're on live, you're a W-2 employee. I was in your shoes before. Okay, start the business. If you want to leverage the tax code, start the business. What are you good at? Find your skill set. Find something that you're good at. Start a business. And now you can be able to start to leverage it. But then as you start to generate income, okay, you can just start off as a sole proprietor, right? Then as you start to generate income, right? Maybe you have a storefront, get a limited liability company immediately, right? But a lot of people are just too afraid. They're trying to get ready to get ready to get ready to get ready to get ready. Just get started. Yep. So I'm gonna try to make this as easily confusing for you, especially if you have a tax professional. And I think this third one is probably one of the most important. Okay, so how to find and hire the right professional to save you thousands, if not more. Again, this if I know I didn't say this at the start, but I'm not selling anybody anything. Okay, this isn't a sales pitch. I truly just want to educate you on some things that are out there for you to be able to make a better decision for you and your family in 2025. Okay, so would you like to know how to hire a right tax pro that's going to save you, 30K in taxes? I'm going to assume the answer to that question is yes. Okay, this secret is one of the biggest problems in this country. Most business owners and individuals believe that their CPA, their accountant, their tax preparer is saving them money on taxes. They're not. They're not. Okay, you're going to H&R Block. You're going to TurboTax. You're going to Jackson Hewitt. Okay, have you looked at the credentials of how to become a tax preparer with H&R Block and tax and Intuit? And I, I'm not putting anybody down. Okay, but it requires for you to you just need to be 18 years of age, and you need to take one of their courses that could take you less than a month to complete. And a GED or a diploma, however, is not required. So, no shade, but there's a lot of tax professionals out there. So you need to understand the types of tax professionals out there. Number one is a tax preparer, right? Tax preparer, they're just gonna they're gonna help individuals, in your businesses. They're gonna help you just fill out and file your tax returns, right? There's a lot of different levels of training and expertise. There's some really, really good tax professionals out there. If you find the right one, right? And they're gonna go to IRS forums, they're gonna go to a lot of different, they're gonna take a lot of coursework, develop some CE credits to be able to stay educated. There's some really, really good tax professionals out there. But then you also have enrolled agents, right? Enrolled agents is it's a and it's not. I know some people always say, "What the heck is an EA? This is an executive assistant." No, it's an enrolled agent. They're a federally authorized tax practitioner who they're empowered by the U.S. Department of Treasury, right? The IRS, and it's actually the highest level that the IRS offers, and they provide advice. Their test is this. They take a similar test to CPAs. It's called a C test, but their test is focused on individual taxes. It's focused on business taxes, and it's focused on representation to help represent you right in front of the IRS. Okay, so these professionals are the people that the IRS trust. One of the that they trust almost the most, right? And including CPAs. Okay, now CPAs, these are licensed accounting professionals who have specific education, right? They've gotten their master's like myself, and they have enough credit. Typically, they have enough credit to where they're going to go sit for the CPA, right? They're going to go sit for the CPA, and that CPA, it has a section on taxes, but it's also going to cover auditing. It's going to also, cover financial reporting, things of that nature, where they can be able to assist you with, your audited financial statements and things like that, right? But it's a four-part section that's going to be help you, and they can help you with tax preparation. They can help you apply. They can help your representation. Um, but the top of the top, okay, the best of the best is the tax elite. Okay, if you've never heard of the tax elite, stands for the elite stands for education. They're heavily educated, and they're continually educating. They have legal authority. And how am I doing? I got 7 minutes. Okay, they have legal authority. They have the intangibles. They're consistently doing training, and they're doing trainings to where they want to educate you. Not they're giving you more value than they're taking, and they have experience. They have experience in your situation. They have experience whether you're a W-2 employee. They have experience with your business, with your type of business, right? Or they have experience in actually implementing tax savings, and they have social proof. Now, the tax elite, they do tax planning. That's a big secret. So, what is tax planning? If you never heard about tax planning, you're gonna learn. Tax preparation is actually a cost, right? So when you get to your accountant in January, February, March, April, right before the tax day, that's a cost. Tax planning is actually an investment with a high return on your investment. Hey, tax planning equals a high investment on or a high return on your investment. So let me explain. Because if I gave you a dollar, or if you gave me a dollar and I gave you back $10, that's a good investment. If you gave me $10 and I gave you $100, it's another good investment. If you gave me $100 and I gave you $1,000, that's a really good investment. And same thing. If you gave me $1,000 and I returned you with $10,000, that's a good investment. So let me ask you, which one of these is the best deal? What do we think? Which one of these is the best deal? it's 1,000, right? It's 1,000. I gave you $1,000. You gave me $10,000. That's a high return on your investment. Okay, so what exactly is tax? So tax preparation happens after the year end, right? And it's just a preparation for submissions. It's just you're just submitting to the IRS. You're submitting your tax return based on your filing status. Okay, but before the year end, typically between Q2, right, Q2 through Q4, you're actually planning. We're looking at your overall situation, your personal life, your business, your regulatory requirements. That's actually going to help you legally reduce your taxes. Okay. I love this image. This just kind of shows you. So, what most people think that they can save on taxes here at the top of the iceberg. But what tax planning actually does is really what you really can, save it with tax planning. Now you may be thinking right now, okay, I got a new business, or maybe you're working a day job, or maybe you feel like you're just paying too much money, or maybe you don't want to get in trouble. You're just like, I don't want to get in trouble. I don't want to play with the IRS. Um, but what the power of tax planning is now, you're being proactive. You're not being reactive. You're on the offensive line. You're not just waiting for something to happen. You're attacking it firsthand. My clients typically know how much they're going to owe on taxes or how much they're going to get a refund on taxes, like the year before tax season is even here, right? The year before. It gets so that gives you peace of mind knowing that you're not going to get a surprise tax bill, right? You're making estimated tax payments. You're preparing yourself for that situation because you're up to date, and that helps actually increase your wealth. Okay. Now, the best time to actually do tax planning is before you have the income. That's really the big secret. Oh, I'll wait till I start making money. No, like start ahead of time and understand what your tax planning is. Now, granted, you do need to have, most people, you probably don't have, if you're not making a decent amount of money, right? And by a decent amount of money, if like your net income or your net profit isn't at least $50,000, $100,000, chances are you don't have a tax problem. There's probably another gap that you need to understand. But that's typically what we're looking for. But it's before that, but you can still have a plan on when you're about to, on before you even get the income, right? Um, Now, some of you may think that tax time is when it's time to save. It's time to save money, but there's the reason why you probably got ghosted by your CPA. You probably got ghosted by your accountant. It's too late if you're trying to do tax planning at that point. All they care about is filing a tax return. Planning happens before year end. Tax planning is the best way to legally reduce taxes. Now, you also might be wondering right about now. Okay, like this sounds great, but I got an accountant already. I got an accountant. I've worked with them for years, and I mean, this is not about you firing your CPA. This is about you learning the secrets that's actually going to save you tens of thousands of dollars on taxes every single year. Now, remember Patricia from earlier, okay? When I found Patricia, she was doing over $123,000 in her business. Okay, she loved her accountant, and that her accountant was actually a family friend. And even though she was paying a few $1,000s in preparation fees, the accountant wasn't helping her save on money on taxes. Her business suddenly grew from $123,000 to $1.3 million in less than a year, and she had no tax plan in place. We found that she was about to be overpaying in taxes by $23,000 on average for about 2 years. And a total, she was expected to overpay by $116,000. That's over $46,000 in cash that she could have had. Needless to say, she didn't like her accountant anymore. And we just implemented some basic strategies, some deductions, right? $6,000 savings, NT structuring, $1,400, retirement, $3,400, insurance, $5,000, income shifting, $6,000, and then also a 5-year tax plan, right? So total $23,000 in year one savings, $196,000 in 5-year savings. What can that do for your financial future? Okay. Now, I'm not saying that your CPA is negligent or incompetent. It's just that not everybody's educating their clients on how to save thousands on taxes. They're just preparing you to return for compliance. That's all they're doing. I hope that makes sense. Okay. I know I'm rolling, but I got 1 minute, so I'm trying to roll, and I'm close to my last two slides, my last couple of slides. All right, good. Okay, so take a picture of this, because I believe when you're hiring the right tax advisor, these are the top 10 questions you need to answer that they need to answer. Okay. I asked them, what is your view of the tax law? Okay, what made you want to become a tax advisor, right? And I'll explain a couple of these real quick. But knowing, what actually made them pursue this career in the first place? What's their passion? What are they passionate about? Or are they just money hungry, right? do you have any reviews or stories from clients that I can see, right? Because you want to hear, how if they can help them, they can help me. Okay, can you give me 3 ways to reduce the risk of an IRS review, like an IRS audit, right? That answer is going to help you know, okay, do they actually know how to help me? What's your process for tax planning, right? Because understanding this is going to show how they can help you get ahead and start planning, on the work that you're going to have, right? What kind of support do you provide to your clients? Do you meet with me once a year, twice a year, quarterly, weekly, right? What's their cadence? How do you learn about new tax laws? How do you stay up to date? Like how you educating yourself, right? How's your staff educating yourself? How are they staying up to date with things that are happening with the big beautiful bill or the things that's happening in at the Senate? Like what do they do? Are they staying up to date to make sure that you don't have to go study? They study it for you. Tell me about your team of advisors, right? Couple last one, like what's your risk tolerance when it comes to tax savings? And do you typically recommend tax deferral or permanent tax strategies? Okay, so I'll give you a second to take a picture of this. But these are some questions that I like. I would, I would gladly answer these questions because I want them to know and have that confidence. If you've never asked your CPA this, it's probably a red flag. Okay, now let me ask you a question. How many of you guys feel like this right now? I know I just roll with a whole bunch of stuff, and again, I'm still very surface level. Like, taxes can be very complex, and I don't want to overwhelm anybody. But who feels like this right now? Yep, I see. Yep. So what we've covered so far is what it's like why understanding like it literally is drinking like on a fire hose. Why understanding taxes is your biggest return on your investment to increase your wealth. How successful entrepreneurs save 10K to 100K in taxes legally. And secret number 3, how to find the right tax professional to save you thousands in taxes, if not more. Okay. Now, option number 1, you could go away with these strategies under your belt, right? And you can start implement them. Right? Do your due diligence, do your research, go to the IRS website, right? But like I said, these are foundational strategies. Or option number 2, you can stick around a little while and I can help you make this a lot easier. Right? How can I make this a lot? How come? Like, I know I'm rolling through this, right? But if I have permission, I'm gonna share something with you. It's gonna be pretty simple. Okay, I'm gonna give you a free hour tax strategy assessment. Okay. Now I don't have a lot of spots for this because my calendar is pretty tight. Okay, so I'm only taking 3 people. Okay. So I'm gonna drop a link and let me find this link because I don't even think I provided it. Right. So I'm gonna drop a link in here. Let me convert back over here. And I'm frozen, guys. Uh-oh. Let's try this. I'm gonna drop a link in the chat to be able to schedule a call. Let's find it. And I'm only taking the first 3. After those 3 are gone, it is gone. And that includes the recording. But you can feel free to still reach out, and I will be able to assist as well. And maybe to potentially book a discovery call, to be able to potentially work with our team. So let me put this in the chat. Okay, so go ahead and schedule a free tax wealth assessment. And really during this call, one of the things that we do is, it's going to be more of an introductory call, but I'm going to ask, typically I ask a series of questions just to kind of understand, who you are. Right? I want to understand, a little bit about your story, right? And I want to know, like how, like what I got to know the history. Like I said, the tax doctor. I need to, we're going to look at your, how much you've been paying in taxes. Are you overpaying? Are you underpaying? Right, we're gonna look at a lot of different things in that nature. Okay, and just really to talk about what are some things that I can give you a projection based on how you answer those questions, on how much you can potentially save on taxes, and it's just gonna depend. Okay, so I know I gave you a lot, but my whole goal is that at the end of the tax year, right at the end of the tax season, this is you. Right at the end of the tax year, you just come tax season. This is you. You just you get a nice little refund. You're just counting your money that the IRS gave back to you. Right, that's gonna be you. We're not. I don't want you to this isn't a political thing, but I really want the best for my clients and the people that serve in my community and of audience. So that's pretty much all I had for you guys today. I hope this added value. If you're watching on YouTube, again, share this with somebody you think might be able to find value in this. If there's no questions in the Q&A, let's see. Okay, so we're good. So hope you guys have a good night. It's 8:05. I'm 5 minutes over. I beat my time last time by 2 minutes. I hope you guys have a wonderful evening, and I will see you guys soon.